Where are European bonds headed amid political instability? Welcome to Market Insight. I'm Ludovica Brignola. The political turbulence in France comes as Germany heads for its own no-confidence vote, adding to headwinds for the euro. And while both countries are mired in political instability, the spread between France's borrowing costs over those of Germany stretched to a fresh 12-year high this month. So where are European bonds headed? To help answer all that and more, I am joined by Jan von Gerich, Chief Analyst at Nordea Research. Thank you very much for being with us today. Right, so you say in your notes that you expect another 25 basis points cut from the ECB at the December meeting, but also that the odds of a larger cut are notable. Can you explain why?
Yeah, well, most governing council members don't seem to be that worried yet about the growth outlook, whereas they still seem to think that there's kind of some residual upside inflation pressures in store. They'll tend to look more about on the GDP numbers that have held up better than the PMIs, and kind of the differences in opinion seem to be growing again, with the hawks pointing out that there's no need to go below normal in terms of rates, and kind of the gradual approach seems kind of the best one for now. But then on the other hand, the outlook has turned darker. There are a lot of uncertainties, not least because of the upcoming US policies. But the ECB tends to think that they want to see what these uncertainties will be, and then they tend not to be that worried yet about the political uncertainties that are kind of burdening the two largest euro area economies, France and Germany, for now.
As you say, there are a lot of uncertainties right now in Europe as well. But, what sort of impact then do you think a 50 basis points cut could have on equity markets and bond markets in Europe? What sort of reaction are you expecting?
Well, market pricing has gone back and forth. At the moment, the risk of a 50 basis point cut in prices is rather small. So from that perspective, if it materialized the 50 basis point cut, then it would be a clear surprise to markets. It would be a clear signal that the ECB intends to take rates lower at a faster pace, probably going below 2% in terms of rates. And since that kind of trajectory is not fully in prices, then I would expect it to boost bond prices, meaning lower yields, and boost risk appetite in terms of higher equity prices.
Lower yields, right. And one question on France. What do you think is, first of all, is happening at, the French situation and French bond yields as well? And how much worse can it really get from the current levels that we are seeing?
Well, everybody's, of course, asking, is this the new euro crisis again? And kind of we saw such huge moves in the early 2010s within the euro crisis. So certainly we're not talking about that kind of a situation yet. But it is France. It is the second largest euro area economy. If people really start to question the French outlook, or that France will not play along the new EU debt rules, then that could still make the situation even more volatile, even more scary. That said, of course, it's hard to see that there will be any kind of solution to the French problems. They are not allowed to have new elections until next summer. It doesn't seem that there's a parliamentary majority for really any kind of action. So I think we need to live with the elevated political uncertainty for several months, even in the good case.
We are seeing an evident economic slowdown in the euro area, especially if we compare the situation with the US, for example. So what sort of impact is this going to have, in your opinion, on inflation and on inflation expectations for the bloc? What sort of trajectory do you have in mind for inflation?
Well, the ECB, of course, is still talking about the upside inflation risks. I think they are as good as gone. The most focus should already be on the weak growth outlook, and that should take care of the remaining inflation pressures. To me, the question is not whether inflation will stabilize above 2. It is more that will we see a stabilization around 2? Will inflation expectations stabilize around the target, or will they go straight through and we will soon start start to worry about inflation being too low and the ECB having to respond to that. I'm not that worried about the upside inflation risks anymore.
Very, very interesting insights. Jan von Gerich from Nordea Research. Thank you very much for being with us today. And that is Market Insight. Don't forget you can watch more videos on Reuters.com.